Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is the FX Rundown. What a day in the currencies. We finally got some volatility. The dollar index poked its head out to a new swing high, the highest level going back to May of 2017, and reversed sharply. The euro made a new low and reversed sharply. Well, let's start first with the European data. The PMIs came out, weren't so bad out of France, but it was Germany. That's what everybody's watching, and a worsened level of growth in the manufacturing PMI side. A big contraction, 44.3. The Eurozone manufacturing PMI also a contraction, worse than expected. So, this got the euro rolling lower early. Risk sentiment was poor. The equity market started kind of moving lower early overnight, just really trickling out a bit of a slow bleed, and then it picked up on these numbers. You got to start to look back at where the risk sentiment started to get hurt. Yesterday, there's Fed minutes talking about inflation being transitory, more than just Fed Chair Powell. That was more a theme. So we started to see the dollar have a little bit of support, and then it was the PMIs from Eurozone that took that euro down and helped lift that dollar. On top of that, the dollar acts as a safe haven a bit. So when you started to see the weakness in equities, it also kept a little bit of a bid on the dollar. But ultimately, when we got into the U.S. hours, it was the U.S. manufacturing and services PMI that really missed big. The manufacturing did not contract, but just above that 50 mark. And looking back on record here, going back to what we see since 2012, there has never been a contraction of manufacturing PMI. And now we look at that, it's going back that far, it's a long way to look. And ultimately, too, this shows you where the overall growth is echoing the U.S. and China trade war. So this is really worrying the markets in general, worrying that risk sentiment. But now that it happened here in the U.S. hours, you're getting the equities turning down a lot sharper, but it's also dragging the dollar index down because this is bad data here in the U.S. now. And so you have a reversal. The dollar index, there's going to be some support heading into the week, 97.5. Durable goods tomorrow are going to be the crucial data point there. And then looking at the euro, it's back above, regaining that 112 mark. Now you're just bringing back that level that we've had as a sticky resistance, about 112.5, 112.60. Now there is a minor level at 112.30 ahead of that, but really what you want to look at is it's a big pocket of resistance up there. If the durable goods number comes in better than expected, you're going to start to see the euro give up those gains again because it's going to shed a bright light on maybe this. People hear people say that manufacturing PMI number was just transitory. So ultimately, that number durable goods tomorrow is going to confirm or deny this reversal. And then looking at the yen, that's been wanting to capitalize today. The safe haven markets, you see the gold, treasuries all rip higher. The yen is one of them doing that, exactly that. And you're seeing the yen facing some strong resistance. It's not quite there, but 91.80, the 92, that was our major three-star level where we failed. Looking back a week and a half ago. So watch that yen running up into there. If equity markets sell off more, you're going to get the yen continue to get bid, especially if durable goods miss tomorrow. You could get a breakout there in the yen. But what you would look at in the S&P is that 2,800 area, and in the NASDAQ, 7240, 7270. We start to get below there, you're going to see that selling pick up, and then you're going to get the yen to get that breakout, but also that durable goods number is going to be crucial. One thing that was more surprising than anything is you get the Canadian and you got the Aussie holding ground today. In fact, the Aussie is lingering at in the green right now, where the Canadian dollar is only down a little bit. They've taken a brunt of a hit here recently. Some of the data in Canada has been better than expected, and that has allowed the Canadian dollar to hold ground here in the face of a weaker, broader sentiment with the equity markets right now. So keep an eye on the Canadian dollar if it starts to give this up, because crude oil, that was a bloodbath today, losing more than $3. That's what you really want to keep an eye on, is this drag the Canadian further. Now on top of that, you have the Aussie dollar holding ground, and the Aussie's been the worst performing currency of these majors over the past several weeks because of this U.S. and China trade war. So this is not any new news for the Aussie dollar, and it is against those previous lows. A lot of support down there, 68.25, 68.5. It's just testing into there. If the situation worsens and it gets below 68.25, then there's going to be a way to go. So, but right now it looks like the Aussie is trying to hold ground into that support level as it's really digested the U.S. and China trade fears over the last couple weeks. Now it's other markets catching up to it. Give us a call. We're here to talk about anything on the board, 312-278-0500. You can email us info@bluelinefutures.com. Check our website for updates. You can sign up for a free trial to research there. But remember, futures trading involves substantial risk of loss and is not suitable for all investors. Thanks a lot.